Welcome to Discovery Watch with John Kaiser.
I'm Jim Goddard. John, this weekend you'll be presenting at the Metals Investor Forum, where all 5 companies in your session are also Discovery Watch companies. They are also all active bottom fish or spec value hunter recommendations by Kaiser Research. I'd like to ask you why you've recommended these companies and what our Discovery Watch audience can hope to expect for them for 2018. First up is Azimuth Exploration, which has been working on the Eleanor South project in Quebec with partners East Main and Gold Corp. Is the Chichu intrusion going to earn the market's respect in 2018?
Jim, Azimuth Exploration owns half of the Chichu intrusion, which is about 10 kilometers southeast of Gold Corp's Eleanor mine in central Quebec. Serengeti Resources owns the northeastern half. And in 2016, this play really started to gel. It was originally generated around 2006-07 when Gold Corp and East Main explored the property that Azimuth had staked. And then later on, Sirius picked up or earned back 100% on the other part of the Chichu intrusion. Now, your question is a very good one, because we've had this story now for a couple of years. One week we get some fabulous high-grade intersection over short intervals, and then we get some low-grade intersection. The Chichu intrusion it's an intrusion-related gold system that's got these fractures in it, and what exactly the orientation and control of these fractures is, which hold the higher grade gold, has been a big mystery. So Serengeti Resources just published a hole of that had some nice high grade interval and several small high grade spikes, but overall it was almost a 600 meter hole that ran 0.7 grams per ton gold. Originally, the Chichu intrusion was thought of as a bulk tonnage project, and then when the gold price sagged from 1900 back to 1100, now it's 1300, bouncing between 1300 and 1350. Several years ago, it was all about finding an enriched high-grade core within this system. Azimuth and its partners currently are very much focused on identifying a high-grade core. They have the Moni trend to the southwest of the area where Sirius has been drilling. They will be going back in there with a 3,600 meter drill program in the winter, and Sirius will be going back with an 8,000 meter drill program. Now, this is a critical year for these juniors, because the market will want to see that all this effort is worth the time and money. Fortunately for these juniors, this is the year which looks like, if we do not have Donald Trump pushing his biggest button and causing a nuclear event that completely destabilizes the world is shaping up for a very strong year. We're seeing economies in all categories put in strong performances. Metal prices finished the year on a high, and with the policies of the United States aimed towards isolationism, it is accelerating interest in gold, which at the same time, its imprisonment by sort of right-wing libertarian ideologues is loosening as the libertarians rush into the cryptocurrency bubble, which looks like it's cracking right now and could, in the next 6 months, completely explode on the downside. And gold itself is being freed to become something of interest to a much broader audience than sort of Ayn Rand cultists that have held it prisoner for the last while. So a gold uptrend could very much spark interest in the resource sector. And that could also help with the Chichu project, or Eleanor South as Azimuth calls it. in that the bar for what counts as something worth mining will be lowered, because then you start getting back into those bulk and tonnage scenarios, and this is a large intrusion. There's a lot of potential tons there. So both Sirius and Azimut could benefit from a rising gold price. Ideally, they benefit from getting a handle on these higher grade cores that can be underground mined. Now, Azimut exploration is a bottom fish recommendation of mine, not because of this project, but because this is one of these companies that has stuck with the prospect generator model for the last couple of decades. It still only has just under 50 million shares out. 60% or so of that is held by insiders, high net worth investors, and Quebec institutions. The head of the company is Jean-Marc Loulin, who has taken a big data analytics approach to Quebec. He assembles all the information that has been filed from assessment work, does all these predictive data crunching studies, and identifies regions that are on a probability basis that may, based on the combination of geochemistry and so on, has potential for certain types of deposits. The company has suffered in the bear market of 2011 because nobody wanted to do anything in northern Quebec or even central Quebec, juniors certainly, and the majors, they have had their budgets cut. They are coming back through their outsourcing strategy of buying sort of 19.9% of a company, which in fact is what Gold Corp did with Sirius when it started exploring the Chichu seriously in 2016. But prospect generators that are dealing with early stage projects have had a tough go. This company is a survivor. It still has $3.3 million in the treasury. It's in my session as a representative of this prospect generator farm out model. The company never really drills anything itself. It's part of that whole cult that says never, never, never do any drilling. But as we head back into a stronger resource sector market, more funds will be available for early stage exploration. Other juniors will be looking for large scale stories. The majors who have been focusing on existing districts that already have known mineralization will start to look at broader conceptual stories. So that's why Azimut is in my session at the Metals Investor Forum and why it is a bottom fish pick right now.
John, InZinc Mining and its West Desert project have been a favorite of yours for more than a decade, but InZinc has accomplished little in the market or on the ground since the 2008 financial crisis. Is this the year that the broken clock finally gets it right?
Well, I am running out of time. It is almost 12 years since I've started following this company. My readers, they've followed it for a long time. In November, the company bit the bullet when it did this large financing. It started off as a $2 million unit financing at 10 cents. It attracted so much interest that Wayne Hubert, the new CEO, who has been around the track a number of times, knows that when money is offered, you do not turn it down, regardless of what you think the proper value of the company is. So they did about 35 million units. It's about 52 million shares of dilution. So there's about 134 million shares fully diluted out. All of them in at a fairly low price, 10 cents with a 15-cent warrant. And it's a broad spectrum of groups that have come in. There is still very little institutional representation. George Ireland's family office fund came back in for more stock after swapping some out to another group that wanted free trading paper. But it is a broad base of retail, high net worth investors who have joined this party, and that kind of puts me in a sour grapes mode. But then I went back to my PEA spreadsheet, the model that I had done from the PEA they published in 2014, and updated it with the 21% federal tax rate in the United States. This project is in Utah, and put in the current metal prices, and was absolutely dumbfounded to see that model run at today's prices would have a net present value of $455 million U.S. with a 10% discount, bumping up to $704 million at 5%. So what that means is when you take 130 million shares and divide it into that, you come up with some astonishing price targets, $4 to $6.50 on a 100% basis. Of course, the project is still only at the PEA stage, and the money they raised, the $3.5 million or so, it is going towards discovery exploration drilling. They are stepping to the east of the West Desert deposit, which is a zinc-copper deposit with some indium and gold and silver credits. But farther to the east, there is zinc with better-grade silver potential up top and high-grade zinc and copper potential below. All of it's sort of a carbonate replacement style hosted system. It's very similar in certain respects to the Hermosa-Taylor situation of Arizona mining, which hit 450 this year after they updated their PEA. This is a beautiful story right now. I've reiterated it as a spec value recommendation, swallowed my disgruntlement about watching everybody else pile in at the last minute and having all this upside, because this project, just on what they already have, if these metal prices that we're seeing today represent new long-term reality, this project deserves to be developed, deserves to be trading a lot higher, and I am a shareholder of this, and will attract institutional interest as we see the zinc market evolve further. And but the excitement coming up, probably by February, March, they will be drilling. They'll be drilling these deep holes to test, probably spend about 2/3 of the budget to see if there is a lot more to this West Desert project than is already known. And the final third, they will retreat into the deposit where the drill density in a high-grade area was inadequate to allow high-grade to be included in the mining plan for the PEA. And basically, if they haven't found anything spectacular, carry right on with the project shifting into feasibility demonstration mode, which is, of course, what institutions like. But in between, we could have a lot of happy people if the company starts showing that there's a lot more to this system that has never been tested, simply because all past exploration was just focused on the skarn mineralization and its close association with magnetite, which created an easy geophysical target to chase. So it's at the show because it's seeking to introduce it to a much bigger retail audience, and it's a spec value hunter recommendation, an absolute value one that I've got, because fundamentally it is undervalued based on the 43101 report done in 2014.
Discovery Watch with John Kaiser will be back right after the break.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
Welcome back. We're speaking with John Kaiser. John, Nevada exploration is another perennial pick of yours that has never drilled a discovery hole. Is 2018 the year Nevada 2.0 becomes a reality?
This is the year that Nevada exploration finally may be able to deliver proof of concept in the form of an original discovery in an area where nobody has any reason to do any exploration. The target area that they just published an update on, Kelly Creek Basin, it is northeast of SSR's Marigold Gold Project and east of the now depleted Lone Tree deposit that Newmont owns. Lone Tree has about 5 million ounces mined from it. It's an open pit mine. It's a structurally controlled system, high angle fault hosted by the upper plate rocks. That's not where you get the fabulous Carlin type deposits such as Cortez Hills and in Carlin itself. But nevertheless, when you've got the right plumbing system and you've got the structures with the Riedel faults in it, the dilation zones and that which allow the gold to drop out within these structures, you can get a very profitable deposit. Now, I myself have modeled Lone Tree. If somebody today found Lone Tree, 60 million tons of, say, 2.7 gram per ton, about 4.6 million ounces, and you ran a mine for 10,000 tons per day with a capex of $300 million, that would have an after-tax net present value of about 640 million Canadian. Now, Nevada Exploration owns 100% of this project. It has been using this hydrogeochemistry to identify areas under gravel cover. It's what you call Nevada 2.0 in the sense that anything that on the edges of the range front or sticking out of the ground in Nevada has had a pretty good series of exploration passes on it that has picked off these targets and Swiss cheesed the area all around them in an effort to try and find something. The next big frontier in Nevada, Nevada 2.0, is to go under gravel cover or under younger volcanic rock cover, the tertiary age stuff. We talked about it a few weeks or last month with Carlin Gold's project where Barrick drilled a very expensive deep hole to try and find the lower plate rocks that have been enriched with gold. In the case of the Kelly Basin, the company spent the past year with its Scorpion rig, which is a type of RC rig. You can't really drill too far into bedrock. You can get, maybe 10 meters into it and collect a sample. You use it as a bedrock mapping tool. But they were also using it to collect groundwater samples in 3 dimensions, and as well as sampling the alluvium itself, because you get the stuff as a lag deposit dragged away from these structures. These structures, they're difficult to pinpoint when they're blind. So the whole approach they've taken is to vector in through the collection of groundwater samples and assaying it for gold and arsenic and antimony, the other marker minerals for this style of mineralization. And they've just published a detailed presentation which shows that not only do they have a footprint of low-grade bedrock mineralization that's considerably larger than the 8 million ounce Marigold system of SSR, which is quite low grade and operated as an open pit mine. But they've got not just one structure resembling the scale of Lone Tree, but several such structures, all within this area of a big giant geochemical footprint. The next stage will be to go in there and start drilling some scout holes to find out if the inferred location of these structures are real. Once you hit the mineralized structure, then it just becomes a mechanical delineation stage. The company is starting off the year with more money than it ever has. It will need to raise more money to mount an aggressive program, but it now has the data set in place to allow serious players, serious investors to say, wow, if this is real, not only do we have something that's like way across the valley from Twin Creeks, not lower plate hosted, but upper plate hosted, but very substantial, several times the footprint of Lone Tree itself. If there's something there, we have a serious discovery play, but even more importantly, it is the method by which this target has been generated. It's what's driven me crazy through the last 10 years and suffering a 10-for-1 rollback along the way for myself and my subscribers. But this idea of using hydrogeochemistry as a remote sensing tool to home in on targets in fertile geological contexts that are basically obscured by cover, in this case gravel cover. This could be validated by the end of, or even by mid-year, and this can repeat itself over and over again in Nevada. They have dozens of other areas where they have collected samples. They did a fair bit of work in the last quarter on Grass Valley South, where we may hear something that they have targets there. And of course, they have the big target at Grass Valley, which is not that far from Cortez Hill itself. It's never been taken seriously by anybody because the structures that control that are going in the supposed wrong direction, though we have observed that Barrick has staked that the flanks of valleys to the west in the same direction, also violating the rule that the structures that host everything are northwest, southeast. So I'm bullish. It's a bottom fish pick because it's been tiring to wait. And again, it's another it's good for people to show up in the 11th hour. Gwen Preston, who is also presenting at the Metals Investor Forum, she picked up coverage of the stock last quarter after they presented at the Metals Investor Forum. This, in fact, is one of the good things about the Metals Investor Forum. We newsletter writers respect each other, and we look at each other's deals. We get a chance to see, okay, what is the story that attracted the interest of my peer? Because, there's 1,500, 2,000 companies out there, all of them banging on our doors. One has to filter through each one of them to get to a story. If one of my peers has done that filtering and liked the company, then it's a lot higher probability of me finding something interesting in that person's pick than by just trying to parse the entire universe. So, Jim, I think 2018 is vindication year for Nevada Exploration, Inc.
Last week you talked about the UDS project of Serengeti Resources, but that is not why Serengeti is a spec value hunter pick.
I have always treated Serengeti as a hybrid discovery exploration optionality type story for its Quanica project in central British Columbia. Last year was a frustrating year for the company because the Korean partner took the entire year to finalize acquiring a 35% interest. Last week we talked about the UDS project and the Milligan West. These are sort of early stage projects, largely blind, geophysically driven. They got something interesting at the UDS. It's a sulfide system within which you can find ore-grade copper-gold mineralization. They may return to that this year. They drilled it last year because they had raised money. The shareholders were kept waiting to see work get done on Quanica. This year the priority is to go back into Quanica to start doing work towards a pre-feasibility study, but also to revisit the IP anomaly to the north and also pursue this system further down plunge. Now, the discovery exploration potential, I'm probably not as excited about that as I was in 2016, but the reason it's in my session is because I think the strength we've seen in gold and in copper is not a mirage that's going to evaporate for us. I mentioned earlier that we are seeing reports that all the global economies are doing well, United States included. But the interesting one is China. And there was an article in the Financial Times today, which talked about China's problem with lying statistics, disguising the true GDP and the associated growth rate. It appears that China's growth rate in that 6.5% was only real in the past year. That in fact the 6 to 7% we've heard about for the past 5-6 years was substantially lower. And the problem is they take all the statistics from the local regions, and all the officials there want to please the Communist Party there in Beijing. So they all fabricate numbers to make it look like everything's going swimmingly well, when in fact it wasn't. And we who follow the resource sector certainly knew that from like 2011 on, things were not going well, and they got uglier. The iron ore market got cremated. Copper sank way back below $2. Zinc had a hard time getting out of its way. Almost all the critical metals, they sank way back. But this time we're getting a number, 6.5, 6.7%, which actually represents very strong growth within China. And this to me is very interesting because last year the resource equities performed quite poorly after a pretty good start in the first quarter. Donald Trump never delivered on his infrastructure promise, wasted his time trying to remove what he seems to think is a black stain on the White House, part of his completely racist perspective on everything, and never did anything for infrastructure. And yet we saw copper climb above $3. We saw zinc get above $1.50. Nickel is back above $5. There is underlying strength in the global economy. China, we always thought was strong. We never could quite understand why. China's maintaining 6.5%, which is compounding on the prior year's demand. Why have the metal markets been so weak? Now we can see that the prices we have today are here to stay unless we get an absolute calamity. So if copper is going to somehow zoom around in the $3 to $4 range, this is going to be very good for projects such as Quanica, which has a strong copper component. And if we get a rising gold price along with it, well, there's also a significant high-grade gold component to the Quanica, and if they start getting any joy chasing it down deeper and it is gold enriched, it doesn't matter how deep this deposit goes. This is a block caving underground operation. Only a small part of it is open pittable. So Serengeti is my optionality bet on macroeconomic growth continuing this year, with gold doing very well. And the only way Trump can really save himself from the mess he is in right now is to go back to the infrastructure promise, which both ends of the political spectrum are okay with, and focus on that. And if in the context of the lower tax rate, he starts spending more government money and encouraging partnerships with the private sector to rebuild America's infrastructure, you layer that on top of growth that's already good, well, then the only thing you will have to fear is that the central bank, the Federal Reserve, decides to really crank the interest rates up fast in order to kill the possibility that workers might see meaningful wage increases.
Coming up, closing comments from John Kaiser when Discovery Watch returns.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN AF. surrounded by world-class gold deposits and mines. Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with John Kaiser. John, Achi Mining is a fairly new bottom fish pick of yours, which has a fairly sizable institutional shareholder base. Why are they presenting at the Metals Investors Forum, where the audience tends to be newsletter subscribers rather than fund managers?
When Jonathan Goodman asked me if I would invite him to the Metals Investor Forum, I was curious. I said, don't you already have a solid audience? In fact, you even did a 40-cent financing without a warrant last year. You've done really well with your La Plata project. You've got a good resource. You're working on a PEA. But then, of course, I made him a bottom fish late last year, precisely because I could see all the fundamentals coming together, and yet his stock had sagged into the 20-25 cents range. And then I saw also a number of block trades being done this year. The stock it hasn't really reflected some of the uptrend other stocks with advanced projects have done. And his answer was, institutional audiences are great. However, this project is a stepping stone project for a much bigger company I wish to build. This project takes advantage of the small minor permitting regime in Ecuador that avoids the tougher large-scale permitting regime and the windfall taxes. So it's not the kind of thing where you're going to get a multi-billion-dollar home run. However, from a retail investor's point of view, all of this is actually quite interesting. And institutional interest will seriously kick in later when they want to put this into production. They have to deliver their PEA first. So he wants to introduce the La Plata VMS project to a retail audience, and there is value in a retail audience. If we are entering a boom cycle for the resource sector, every retail shareholder becomes an asset for the company, because once things start trending, once fundamental results start actually delivering on expectations, each retail shareholder becomes a self-appointed, uncompensated promoter of the story. So Achi wanting to be at the Metals Investor Forum with an advanced, relatively small scale play like this, where there will be no fund managers in the audience, it makes a lot of sense. He needs to shore up his audience. He can't rush the delivery of the PEA, which will come later this year. But being at Metals Investor Forum is a very strategically smart move for Achi. They are there because I think Ecuador is going to blossom. This company is also a foundational company for what I think will be a much bigger operation that Jonathan Goodman builds. And as we talked about in an earlier Discovery Watch interview, he is the son of the legendary Ned Goodman. He is also the son that has all the mine engineering experience. He will be the one that wears the mining crown of the family going forward. And Achi, to me, it's one of those, perfect timing markets. We're not yet in anything resembling a frothy resource sector bull market. You can see the turn slowly happening, and yet you can still see stories such as this for really low valuation. And even if the upside on this is just sort of like $1.50, 20 cents to $1.50, hallelujah, I'll take that any day. But this is the kind of sort of management team and story structure where if we do get into a multi-year resource sector bull market, you could see something much bigger evolve, because La Plata is not going to be the only project. This is not a company which Jonathan is building to flip out to somebody who wants to operate a mine in Ecuador. It is a base building stepping stone.
Skeena Resources was in your Metals Investor Forum session last January, but this year it's presenting in Jay Taylor's session. Yet you just published a Spec Value Hunter update on Skeena, which has also been a Discovery Watch mention. Why is Skeena not in your session?
I had Skeena in my session last year in January because the company had optioned the SNP project from Barrick. This was the high-grade vein on which Ron Nedolitsky's team had worked in the 80s. It was eventually developed by Homestake, produced over 1 million ounces at an astonishing grade of 27 grams per ton, which is just 1 ounce per ton. It was stopped in 1999 because the UK was advertising its upcoming gold sales to maximize the lowness of the price that they could get. We had all these parties, these producers such as Barrick, forward selling way more gold than they were actually producing and profiting from the downtrend in gold, and also making an arbitrage on the direction of the U.S. dollar, which at that time was rising. So, but Skeena had 500 million shares out at the time. Brent Cook and I got into a discussion during the panel at that show about the merits of value versus tight structure. He's more in the tight structure camp, whereas I kind of like to try to side with the Australians and say, no, you've got to look at the value, which means you need to do a bit of arithmetic, not just look at the stock price. And I think I won the argument then, but Walter Coles had to keep, raising more money. He had capitulated the year before and allowed warrants to be included. And in the middle of the year, they had finally vested for the 100% of the SNP interest. The problem was they couldn't get underground until they were fully vested because Barrick was concerned about the liability of allowing them to do so. And to reach the parallel zones and what was left of the twin zone that was still there, but with $260 gold, it just wasn't worthwhile for Homestake to keep chasing it. And when gold improved Barrick, it was just too small for Barrick to bother. That didn't really happen until September, October, but they needed to raise money, did another huge dilutionary financing, and then bit the bullet, did a 10-for-1 rollback, which knocked it from 700 million shares back to 70 million shares. Now it has about 100 million shares fully diluted. They've got about $6 million in the treasury. They're in good shape. So I didn't really invite them back because I was kind of disgruntled as to how this all played out. Jay Taylor, however, had seen the presentation, understood the value component of it, ended up adopting them. So he invited them way before I even thought about it. I thought about it after they optioned the SK Creek deposit, which is another Golden Triangle project with which Ron Nedolitsky was involved in the late 80s, early 90s. That was a fantastic high-grade discovery where Murray Pesum was really the driving force. 3.5 million ounces gold, 180 million ounces of silver, produced at 43 grams per ton gold, 2,200 grams per ton silver, from a mere 2.5 million or so tons. When Barrick inherited that in 2001 when it took over Homestake, it kept operating until it shut down 2008. They had essentially depleted the 21B zone. What was left was the 21C and A zones, which had been discovered before the 21B was hit with that famous hole 109 step out. It is more a silver gold zone with lesser credits, lower grade. It's also, largely underground. This is what Skeena is after. They did a deal where they can acquire 100%. They have a large balloon payment of $10 million down the road. Barrick can claw back for 51% by merely reimbursing 3 times expenditures, if they demonstrate 1.5 million gold equivalent ounces. But the new exploration VP, Paul Geddes, he is not really going out there to find some sort of 21B zone that the 700,000 meters of past drilling overlooked. They have gone in there and remodeled the 21C zone with a lower cutoff grade of 3 grams per ton. Previously it was 15 grams per ton. I've done a sort of an eyeball visualization of it. I can see a 3 million ton footprint. If the grade ends up being 5 to 7 grams, that's anywhere sort of between 500,000 to 1 million ounces gold equivalent. That's not going to hit Barrick's back end. The company's strategy is to develop a minimum of 500,000 ounces at each of Snip and at SK Creek, and ultimately feed a central milling facility from both deposits. The upside is that we get 1 million ounces from each demonstrated again, neither of which would trigger any back-end rights. And if we do get a gold uptrend, then we get the additional boost that maybe an even lower cutoff grade can be used to stitch more mineralization into underground mineable zones. So it's at the Conference and Jay's session for good reason. With the rollback, we don't have to worry about the endless shorting going on with people owning tens of millions of cheap exercisable warrants. There's only 16 million warrants out between $1 and $1.40. With the tighter structure, with 2 important 20,000 meter drill programs going on, which are almost more like verification rather than discovery. This is the kind of story that can attract an institutional audience, and it's the reason that it continues to be a spec value hunter recommendation on my part.
John, thanks for the update, and remember to bring your umbrella and gumboots to Vancouver.
And a mask also to protect myself from the flu circulating there?
Well, it's everywhere.
I guess I'll probably catch it in San Francisco airport and bring the latest variant to Vancouver and share it with all my audience.
John, thanks for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howestreet.com. Discovery Watch is a production of How Street Media Incorporated.